Shift our gears to matters business. Credit rating agency Moody has upgraded Kenya's sovereign rating to B3 from Caa1 and revised the economic outlook to stable. The credit rating agency said Kenya's external liquidity position has improved, supported by higher foreign exchange reserves, a narrower current account deficit, and a more stable shilling.
Moody's Ratings has upgraded Kenya's sovereign credit rating to B3 from Caa1, saying the country's risk of a default in the near term has declined following improvements in foreign exchange liquidity and market access. The agency pointed to a stronger external position, with foreign exchange reserves rising to 1.6 trillion shillings, equivalent to about 5.3 months of import cover. Moody's said the improvement was supported by a narrower current account deficit and a more stable exchange rate. Kenya's return to international capital markets was also a key factor. In 2025, the government raised $3 billion through Eurobond issuance and used part of the funds to buy back $1.2 billion of bonds maturing between 2026 and 2028. The move pushed the next major external bond maturity to 2030. However, Moody's said the rating remains capped by a weak debt affordability and slow fiscal consolidation, as high domestic borrowing costs and political and social pressures limit efforts to narrow the fiscal deficit, leaving Kenya vulnerable to shifts in financing conditions. Interest payments consume more than 30% of the government's revenue, while the fiscal deficit is expected to remain close to 6% of GDP. The agency has also revised the country's outlook to stable from positive, reflecting expectations that the recent improvements in liquidity and financing conditions will be sustained, with risk around the baseline broadly balanced. Benson Rioba reporting for Lunchtime News.